Welcome to biztech's first personal finance show. Now, over the next 1 month, we're going to be talking about personal finance for people of all ages and all levels of wealth so that to improve financial literacy. We will be focusing first this month on the basics. However, from January, we will be having specific shows relating to financial literacy, as well as shows specifically for millennials and for retirement planning. Now, today's show will be Personal Finance 101, the absolute basics for personal finance. I'm Brian Fernandez, your host.
And I'm Sharon Chang, your co-host. And today we have with us Robert Fu, founder of MyFP Services. Welcome to the show, Robert.
Thank you. Nice to be here.
Now, Robert, let's start by taking a look at our finances. What is the absolute first thing we need to do in terms of finances?
Well, like I shared in BFM, if you talk about finance, the first thing you've got to look at is your cash flow.
Okay.
Because if your cash flow fails, nothing works. Your investment doesn't work, your insurance doesn't work, nothing works. Your cash flow is the first thing you must look at.
Now, also one of the things that I suppose from the very onset, depending on which stage you are in your life, is what are your goals in terms of your personal finance, right? Your short-term goals as well as your long-term goals.
Correct. Yeah, basically, when you talk about finance, you got to talk about what is the goal you want to reach. Okay, whether short-term, medium-term, or long-term, what is the goal? And the goal can only be during your life, right? Okay.
Yes.
That is why we say it's a goal. Okay. The goal is within your life. Whether you want to educate your children, you want to have proper retirement, or you want to make sure that you can have money to pay when you're landed in the hospital. These are all within your lifetime. Okay. That's why it's planning within your life.
Robert, you mentioned about cash flow in order, but to have a good cash flow, you need to budget, right? So, budgeting is actually one of the steps to reach your financial goals.
Correct.
So can you actually tell us what are the key things that we need to consider to have a good budgeting plan?
Okay. So in the cash flow, the simple thing is this. Do you know where your money is coming from? From your salary, from your business, this is where your money is coming from. Or from your investment, this is where your business, your money is coming from. Then do you know where your money is going out? This is the outflow. Okay, so if your cash flow is constantly coming and is enough to meet your outflow, okay, sometimes you may be negative, but generally you're positive. Then we'll say your cash flow is okay. So when the cash flow is okay, then we talk about actually the other issues about your finance. Yep.
Now, the other issues, I think one of the key things also in terms of budgeting is also your long-term and short-term budgeting. As you correctly pointed out, when we want to talk about budgeting, we want to talk about putting aside money for example, for the children, for things that we want to save up for. But very importantly, the need for an emergency fund to be set aside. Now, because COVID-19 actually has really shown us the need for emergency fund. Now, what is the rule of thumb when it comes to this, Robert?
Okay, if you talk about emergency fund, everybody needs some sort of emergency fund, right? The question is, how much do I need to keep? Some will say 3 months, some will say 6 months. It is a matter of what is the amount you're comfortable with, that your cash flow will still go on and be positive. So when the emergency comes, is your cash flow still okay after the emergency? Okay. So let's say, let's assume, make an estimate. What is the emergency? Oh, if I land in hospital, I have to spend, let's say, $30,000 or $50,000. Okay, that's your emergency. So that is the estimate of what your emergency is. You must have that money to be able to meet that emergency. And you can keep that money in your fixed deposit, your investment that you're getting out fast. Okay, that becomes your emergency fund. Or if your credit card is able to allow you to take out 50,000 to pay for this, that becomes like an emergency fund too. Okay, so it is how you feel comfortable that you have the proper emergency fund.
So, but Robert, sorry.
Go ahead, Sharon.
Robert, is there like a standard framework whereby you like a 50, 30, 20, or in your budgeting plan, like maybe you allocate 50% from your net income for all expenses and 20% on saving? Is there like a standard framework for this?
I mean, you can have your own kind of framework, okay? You can say, okay, I'm earning, let's say, 5,000 a month. I want to make sure that I build my emergency fund, and I can estimate my emergency fund is, let's say, 50,000. So you want to save at the 50,000 so that you can have the emergency fund. So you save, let's say, 1,000, 2,000, 3. Say, I want to make sure I have my emergency fund in, let's say, 3 months. Then if your emergency fund is actually, let's say, 30,000, you have to save basically up to 30,000 in 3 months. Then you can say, I have emergency fund. Then many times also your emergency fund may change because your feeling is different. You say, oh, now I think last time I was single, no. Any emergency, so I'm not scared. Okay. They say, oh, now I'm married, I got children to depend on me, My emergency fund got to be more than just 30,000. It's got to be, let's say, 60,000 or 100,000. Then your emergency fund changes. That's why you say in finance, it is something that's dynamic. It is never static. All this thing about, if it is 3 months or 6 months, these are all agents talking. Right? Agents talk like this. Because why? They want to sell you a product. Okay? We advisors, we look at the client and say, what is the interest of the client? Then we say, because every client is different. Some are older, some earn, let's say, 2,000 a month, some earn 10,000 a month, some some clients earn 50,000 a month. Okay? So your emergency fund is different. Some are married, some are not. Some are married but no children. Some are married but a lot of children. Then your emergency fund will be different. Right? Some will say, oh, I only have 2 cars. But some will say, I have 5 cars. Then your emergency fund will be different. It depends on the client. It doesn't depend what this fellow say, oh, maybe it's 3 months. What kind of nonsense are you talking 3 months? Because my life is different from your life. That's what I say.
Now, borrowing is another thing, Robert, which some people is a dirty word. They don't want to borrow any money, but actually borrowing smart can be a smart thing to do. Now, so when is it smart to borrow money?
You got to look at your life, okay? When you say, I think I feel comfortable if I have a house, okay? When you say that is what you say, Then you say, okay, how do I get a house when I don't have money? I only earn 5,000 a month, and the house cost me 400,000. You don't have it now. That's where you say, okay, I need to find a way to borrow the money so I can have the house that makes me comfortable, that my shelter is protected. And you got to think about, when I borrow this money, where I borrow, let's say 30,000, okay, 300,000. Then you say, I have to pay it over 20 years. Can I pay it? Can my job that's giving me the money, can be paid? When you can pay it, that is what I call proper borrowing. Proper borrowing.
Robert, there has been, recent talks that Malaysians do not have enough savings for retirement, right? And EPF has also raised the minimum savings target by age 55 to 228,000. And according to them, only 18% of its members have this much, meaning that 82% of Malaysians are not expected to have enough savings for retirement. So what's your thoughts on that? And actually, when should we start saving?
This one, I think I actually have reported to Free Malaysia Today reporter. There's a link I can share with you. And I also report to the Star reporter, and it's a Star article too. I can also share with you. You can say, okay, my comments there was if Malaysian government say, oh, because of COVID-19, a lot of people no job lah, no enough money lah. I allow you to borrow 10,000. My comment is, you borrow 10,000. Do you have a plan for the whole balance sheet of your life? You know, right? Your life is not just EPF. You know, your life is everything else also. Okay. If you don't have a plan, which I can say most people in Malaysia don't have a proper plan, then to borrow something without a plan is a big risk. Why? Because let's say 10 years later, things may change, you may have a problem, right? Because you don't have a plan. If you have a plan that is working from now until the end of your life, then you say, okay, I take out this money and I spend my $10,000 from EPF. Then you can say, yes, you can do it. But if you don't have a plan, it's like driving a car without a steering wheel, right? How do you drive? Without a map, you want to drive to Penang. Okay, you may know how to go to Penang. You ask this can go this way. If you go to a place where you don't know the roads, everything, okay, and you don't have Google Maps, you don't have Waze, do you think you know how to go to Penang? You may get to Penang, but you may be going there 2 days later, right? It depends, because a financial plan is like a map. Without a financial plan, it's driving blind.
No, and you know, Robert, my personal thoughts on this withdrawal thing are really, there's two sides of the equation. Actually, but I think fundamentally, I agree with you. The retirement funds should really be safeguarded. In fact, the government should pump prime that money into the individual's hands, because the government has the capacity to borrow, and the government can make transfer payments and things like that. Because we already have a problem with underfunded pensions and underfunded retirement. We are basically making this problem even worse.
Yes, you're correct.
You know, so I'm just completely against this whole thing. But there's the other side of the equation, which is a valid one also, where people are hurting right now. You need to look at today's needs. But for me, my thoughts are that taking a little bit of money out progressively, the 500 ringgit a month to help alleviate people's burden, while it's not ideal, it is partially, I think it's a good solution. Even though philosophically we may not agree with it, but from a needs basis, I think that's important. So you cap the amount that they take out every month. But when you give people 10,000 at one go, more likely it will be spent, and it's very hard to replace money. It's easy to spend, it's hard to earn.
Right, correct. And you must understand, when you talk to people who are EPF contributors, you're talking to basically most of the people who don't have a proper financial plan in their life. It's easy to say, okay, take that 10,000. When the person doesn't have a map in their life, okay, if you take the 10,000, as you say, it's very easy to take the 10,000 and spend, right? Then after the 10,000, what do you do? Yes. That is why I say lending people the money from their EPF is a dangerous thing. It's an earthquake, you know.
Yes.
When most people in Malaysia don't have a financial plan.
Robert,
absolutely.
Yep.
You mentioned about taking out money from the credit card for emergency fund, right? But I mean, I find it it can be useful. Also, it can be detrimental, because at the end of the month, all right, what if you can't pay your credit card installments? That's why many of us actually land ourselves in deep financial difficulty, right? So what is the smart way actually to use the credit card?
Okay. Okay. Your question is, what's the smart way to use a credit card? Okay. For credit card, as I've given many of my talks in financial planning to many corporations, credit card is a useful tool, but at the end of the month, better pay everything. That is a wise way to use your credit card, because what you use is a credit card, you have to pay back. It's better to pay before the credit card charges you the interest rate. That is the way to do it. How many people do that? Very few, right? That's the problem. That's why we say you have to use a credit card is a very useful utility. But at the end of the month, before the interest comes up, you pay everything. That is a wise way of using credit card. Okay? If you buy, where I told the people in attendance, I said, when you use a credit card, you say, okay, I paid some, I pay 5% first, I leave some for the second month. Then the warning light is yellow already. Then you say, okay, I pay another 10%, I leave some for the second month. Then the warning light become red already. When you say further third month, the red light is red, is blinking, That is why I call is a thing that if you don't know how to use, it becomes dangerous.
Yeah, and I think, Robert, that extends to also where a lot of consumers get into financial difficulties because they use credit cards and to borrow for things like consumer goods, whether it's white goods, it's furniture, or they take basically loans to buy cars and take a 9-year loan. I think that's where I think from a financial literacy and from a financial planning perspective, that's where many consumers hurt themselves.
Correct. When you don't have a plan, you're basically planning to fail. Simple.
Any final thoughts before we go, Robert?
Depends on what questions you have. I got a lot of thoughts.
What are your thoughts? What's the best piece of advice you would give individuals in terms of managing their money from the very basics perspective, if you could sum it up?
Actually, the best thing to start with is try to have some sort of plan for your life. Okay, it can be a kitchen table plan, simple plan. Try to have some sort of plan for your life. It's worse than having no plan. Okay, having a simple kitchen table plan is at least a step forward. Okay, but if you want to have a proper plan for your life, that's why you got to talk to advisors who know how to do it for you. Okay, and plan for your life. They know your income, they know your expenses, they know what kind of risk you take in your investment, they know what kind of risk you want to take when you talk about your insurance coverage, everything. Then we work out and we know about inflation rate kind of thing. Then we work out, we can calculate. This is something this is our profession. We are CFP, financial planners, we are licensed. This is our profession. We have been doing for our clients for so many years already. But many people don't know about us. Why? Because we are the only fee-only financial planner in Malaysia.
Well, Robert, thank you very much for taking the time to be on the show and sharing your years of wisdom. Now, we've been speaking to Robert Fu, the founder of MyFP Services, on biztech's first weekly personal finance show. I'm Brian Fernandez.
And I'm Sharon Chang. This video will be on our Facebook and LinkedIn site, as well as on our website, www.biztech.asia. Please check us out on our website for business and technology conversations, for articles, videos, and podcasts. Please subscribe or like our various platforms. Thank you.